Non-current assets, I said, non-current assets are resources that could last for more than a year with the business. These are what we call non-current assets. So we have property. Property can stay for more than a year, yes or no? Yes. Fixtures and fittings, fixtures, like these things, they can stay more than a year with the business, yes or no?
Yes.
Not only these are current assets, we have plants and machinery, They are current or non-current assets. We have furnitures. They are also what? Non-current assets. Then we go to current assets. Why do we call them current assets? We call them current assets because they can only last less than a year. They can't last more than a year with the business. Example, inventories. These are the stocks that we are selling as a business, the stocks we have. These are the inventories. Do we get inventories? Mm-hmm. Trade receivables. This is stocks. Trade receivables is the same as debtors. Debtors. Those are the ones that are owing the credit customers.
Yes.
Our credit customers are our debtors. I think it's clear.
Yes.
Trade receivables.
Cash.
The amount of money you have at hand or bank. So cash could be hand or bank. Is it clear? Any question about that?
Yes.
We got question?
No.
Okay.
I thought no questions.
Okay. Current liabilities. Why do we call them current liabilities? They are current liabilities because they cannot last. These are debts to the third party, but they cannot last for more than a year. Example is trade payables. What are trade payables? Creditors. I should repeat this.
No, not current. But you said just now. Current.
Yeah, current liabilities.
Yes.
The debt to the third party. Debts to the third party. Debts
So it's not like current.
to the third party. It's not like what? Like current assets.
Yes.
Yeah. Liabilities. They are debts. That means you are owing the third party. You are owing a business or you are owing a supplier.
But you need to pay for less than a year.
Less than a year. Thank you. Do you understand? So examples of these are trade payables. What are trade payables? Your creditors. Creditors, which can be your suppliers, those that you are owing in the business. That's right. Taxation. It's also a liability.
Yes.
Another one is overdraft. Bank overdraft.
No charges.
Loan.
No, loan is a non-current.
Oh.
Bank overdraft is, we talked about bank overdraft.
Yes,
right?
yes.
Because you have to pay
Within 6
within
months.
6 months.
Yes, you have to pay back. So it's part of non-current, part of current liabilities.
Okay, Mr. Like if I loan from someone else.
But
If you borrow from someone.
Yes.
على حسب المدة اللي يبيعها.
Please.
I told him as what limit he gave you.
Yeah, it depends on the timing.
So if it's less than a year, it will be
Current.
Correct. But if it's a loan will take more than a year.
Yes.
It's non-current. Like.
Non-current. Is it clear?
Yes.
Okay, yeah. You talked about mortgage the other time. I told you what mortgage is a liability. Do you see mortgage here now?
Yes.
It is not current. It is non-current liability because it will last for more than a year.
Yes.
So how do we get our net assets? Our net assets is not assets, current asset or asset minus liabilities.
Minus liabilities.
Do you get it? So what do we have here? Now we go to shareholders' equity. What are shareholders' equity? We're talking about investors in the business, the amount of money invested into the business. Share capital, the value of the capital, the shares is sold. Retained profit. You know you have profit made in your statement of comprehensive income. In your statement of comprehensive income, you make profit, yes or no?
Yes.
The profit can be distributed or what? The profit can be distributed or retained, right?
Yeah.
Yes.
If it is retained, you add it to your statement of financial position. Other reserves, the amount of money you've kept that is not used. Is it clear?
Yes.
So all this gives us our capital employed, which is the amount of money we made through shares. The retained profit, the profit you made that you are putting back into the business that you're not sharing to shareholders. The share capital, the amount of money you make through the sales of share. And other reserves, you add them together to give you what? Capital employed. That means the amount of money put into the business. That is capital employed. Any question about that?
No.
Let's go down, please. Yeah, hold on please. Current asset, I explained them already. Trade receivables, your customers, your credit customers. Current liability, within 12 months, we said that already. Scroll down please. Net current assets, it's current asset minus liability, we talked about that. Net assets, okay, shareholders' equity, I talked about that. Scroll down please. And that's all about that, scroll down. Hold on please, thank you. Now, interpreting the statement of financial position, it said, the statement of financial position will show the financial position of a business at a given period of time and can be used to evaluate the performance and potentials of the business. So, because you know what the assets of the business are, the liabilities of the business, you know them already, it reflects in the performance of the business. And not only that, it also gives investors the ability to understand it gives them confidence that, oh, this business has future. That, oh, they can invest in such a business. If a business is having so much assets than liabilities, it means it's a business that is doing well. So it has potentials. So investors might be able to invest in such a business. Do we get it?
Yes.
So it shows one, the value of all business assets, capital, and liabilities. You get to know through your statement of financial position, the resources that belongs to the business, the resources that the business is using that does not belong to the business, the amount of money invested into the business, like the share equity. Asset structure of a business, which means how the money raised by the business has been spent on different types of assets. Because we know the value of our assets, you know, we said we have the current assets and the non-current assets. With the statement of financial position, we'll be able to know the value of our stocks, the value of our debtors, the value of our cash, the value of our bank, the value of our plants, the value of our fixtures, the value of our machinery. We'll be able to know. And all these things are amount of money spent by the business. So we'll be able to know the value of what we have spent on each asset. Do you get the point?
Yes.
Capital structure of the business, which analyzes the different types of funding of the business. So because we have the capital, which is the share equity, we'll be able to know, stop that and please focus here. We'll be able to know, for the share equity, we'll be able to know the amount of profit we made that we have put into the business. We'll be able to know the amount of money invested by different shareholders. We'll be able to know the amount of reserves we have. At the end of it all, we'll be able to know the amount of capital that has been employed into the business. We won't be able to know this without preparing the statement of financial position. And the last one, value of net current assets, which shows how much working capital a business has, indicating whether a business has enough liquid resources to pay its immediate bills. You'll be able to know if the business has money to be able to pay its expenses or not. Your statement of financial position will state it. Any questions about it?
No.
So that's all about statement of financial position.